Good evening, everyone. I am Vaishnavi Vaiti from Kirin Advisors. Welcome to the virtual roadshow of Aelea Commodities Limited. Today, we will provide a brief overview of Aelea Commodities Limited and its innovative business model, along with the insights into the cashew trading industry. Aelea Commodities, established in 2018, specializes in processing and trading cashews for B2B and B2C markets in India and internationally. The company imports raw cashew nuts (RCN) from several African nations and also trades in cashews, kernels, and byproducts like bagasse. Area's manufacturing facility operates with a 40 TPD capacity over 85,000 square feet, known for best-in-class process and efficient supply chain capabilities. Area is recognized for its exceptional customer service. From management team, we have Mr. Josefa Jawadwala, Chairman and Managing Director. Hello, sir.
Hi.
Welcome. Good
Hi.
evening. Mr. Ashok Patel, Full-time Director and CFO. Hi, sir. Good evening. Welcome. From Ekdarshit Capital Private Limited team, we have Mr. Krunal Pipalia, Vice President.
Hello
Hi, sir.
everyone.
Good evening.
Hi.
Welcome.
Good evening.
Now I hand over to Mr. Josefa, sir, to give us more insights about the company and its future plans. Over to you, sir. Thank you.
Thank you, Vaishnavi. Aelea Commodities was, as Vaishnavi told, it was incorporated in 2018. Primarily, we started with trading activity, and in 2019, we actually started manufacturing of cashew products. Initially, we were doing cashew processing only, and then we entered into the byproducts, which is including oil, charcoal, and activated carbon as well. Aelea today has a capacity of 40 metric ton per day with aspirations to increase this capacity to 140 metric ton. We are currently in the top 10 ranking in cashew processing is in India, and in Western India, we are probably number one in processing. Besides cashew processing, we also have our future products that we work in. These are including sugar, rices, pulse, and wheat flour. Uh, yes. Next, can we have the slides, please?
Yes, sir. Let's start with the company presentation.
Yeah. Next slide. Next one. So we we have a USP, as I said, in cashew processing, and currently we are based in Gujarat with a capacity factory which is spanning around 85,000 square feet. Next slide, please. We are 6 years old company with more than 45 employees on roll, based in two verticals and three countries. We are predominantly strong in our domestic as well as global supply chain, and we have strong offline presence in the general trade, modern trade, and institutional customers. We are currently utilizing a 40 metric ton capacity at almost 95 plus percentage, and we have had an exceptional financial closure for FY24. The numbers are on the display. Next slide, please. So this is what our journey has been. For 2020, we had actually started this plant of 40 metric ton, and in by 2022, we were given some exceptional awards on India 500 startups. We were also recognized by institutions like NABARD and some other magazines which covers industries like Industry Outlook. In 2024, we are now looking at expanding this capacities by 2.5x and looking at going for deeper in the value chain of the byproducts. Yeah, next slide, please. So the financials, I'll ask Ashok to take it over.
Hi. In the terms of top line, last 3 years it has been consistent over 100 CR plus on a consolidated level, and EBITDA is also at 10 CR plus. For FY23, it was little bit effect of the lagged effect of the COVID, which is a little bit down. Now again, with FY24, we are on that, and it has crossed the limits which was in FY22. Next slide, please. In terms of CAGR growth, ROC, we are consistently growing. You can see the numbers on the screen. Next slide. We have a current robust current ratio which is currently running at 1.48. Then receivable turnover ratios are also in line with the expectation, as we have a very little credit exposure to the very few corporates. Rest all we get into the advances. And we have a good APS at 8.15 in FY24. Then NAV of consistency growing from 20.24 to 32.57. Next slide, please. These are the few product lines
Sorry.
and customer base which will are available, like these are which are available in retail segment as well as B2B segments. Those you can take it on this customers and this.
So predominantly, we are a B2B company where our 95% of our sales happens in B2B segment. General trade accounts to more than 80% of our overall sales, and mainly the main packing is in Supreme Cashew brand. After this, we have another 15% of the sales which is happening in modern trade as well as the institutional customers. The 5% of the sales which happen is basically in the consumer packs that you can see. This is again more than 90% of this happens in the modern trade as well as the institutional customers. We have presence in the e-commerce space, but that is not significant for our business. But yes, it's growing. What is important between our two brands is basically Supreme represents a premium packing, as well as Tribal is about being economical. So serving the right product to the right consumer is our focus, and we also have some flavor cashews as well in this. Next slide, please. Some of our customers includes the likes of modern trades, international trade houses, and brands that are actually looking at ingredients as cashew. Some of the names are actually given here. Next slide, please. So these are pictures of the processes that happens in the manufacturing of cashew nut that we eat. Uh, we can just roll the slides. Next slide, yeah. Yeah, this is the pictures of the factory currently. Next slide, please. So what is key to cashew processing is that you should have skilled labor. And in FY22, when we were starting the cashew processing in this factory, we were absolutely in a new area where there was no people in the cashew skilled, and that's why the team was getting utilized at a 50%. We have significantly invested in the skilling of the people in this area, and now today we almost utilize more than 95% of the capacity, and rather it would be better to say that we are utilizing to the fullest of the capacity as of today as we speak. Yeah, next slide, please. So, I mean, I've introduced the rest of the management here. Myself, as you can see, and Ashok, you can see here. We also have Mr. Atyari, who is a non-executive director and represents as one of the promoter and the chartered accountant. We also have Mr. Vaishali, Mr. Kanbabar, and Mr. Chandresh, who is independent directors. Next slide, please. So, what I would like to really cover in deep is basically about the byproduct of cashew waste, which is the cashew shell waste. Uh, I'll just give you some history about cashew. Basically, cashew predominantly is a Latin American nut, and it was initially harvested for its oil. It was coming out of the cashew shell waste today, And since then a lot of cashew nuts used to come out, and cashew nut was being thrown away. People decided then that we should actually eat cashew nuts, and that's how cashew nuts started getting edible. So the prices significantly changed. The byproduct, which was cashew kernel today, uh, moved up in the value chain and became the main product. And the cashew started getting ways that we currently have. We actually can make CNSL oil out of this, as well as the cake. From the CNSL oil, there is residol that can be made, raisins that can be made. We can also make cardinal, and it's also possible to make biodiesel that we can produce. And this is where the bioenergy and biosecurity, biofuel security is something which is a larger picture that we can talk about. Talking further on this biodiesel, the diesel calorific value is somewhere around 10,800 kcal, and for this biodiesel, you have a 10,200 calorific value. So it's more or less in the calorific value, meeting the requirements of the diesel. There is further that we can process is around from the cake. You can actually make charcoal. This charcoal can be used for fuel purposes, and it has a very high calorific value. It's around 6,000 kcal, and also has 80% fixed carbon and less than 1% ash content. Because it has more than 80% fixed carbon, it is a primary candidate for an activated charcoal, and this charcoal can be made to use for refining of purification of water, and the purification of sewage water as well. Next slide, please. So our strategic business planning, we are looking at expanding the scale so that we can economically utilize our byproducts waste cycle as well. It's needless to say that when you are expanding at 2x, it hits in the operational, it kicks in the operational efficiencies, and that's where we are expected to have better margins as well. We are also continuously focusing on innovation and R&D, and that's where the activated carbon and biodiesel play helps us enhancing the value chain. And our always focus has been the customers and spreading the geographies. Currently, we are not able to cater to all the geographies in India, but we are trying to expand the capacity so that we can serve the customers who are not served today in the central India and as well as the eastern India. Yeah, next slide, please. So for our core is basically the promoter's experience itself. We are in total having more than 50 plus years of experience in commodity space. We also have more than 30 years of experience in banking space, and we also have more than 20 years of experience in compliance space. So this is in total the experience of the four promoters that you have. We are most preferred by our customers primarily because of not a single product that we do, unlike any other cashew processor. We have other products like rice, sugar, and wheat flour that are future products of ours and currently being traded, and that helps us to give customers a more a basket of products. We have exceptionally focused on the quality services that we can provide to a customer, and we have a well-established systems for running up day-to-day procedures and processes. Next slide, please. So something more about the cashew supply, the industry. India is the largest consumer of cashews. We consume more than 325,000 metric tons of cashew per annum. We are second by only USA, which consumes one third of the cashews that we consume, around 1 lakh tons of cashews that is consumed by USA. And that is basically because in India, cashew is not only eaten as a snack, we also eat in sweets and savories. We also eat in our gravies. We make cashew curries and all those stuff. So we have a variety of application, and that is also our focus of how to provide cashew to customers in the right application form. At today's market value, the cashew industry in India is somewhere in 25,000 crores plus, and in globally, it would be more than 2.5 times of what India consumes. Now, this cashew as an industry, also within India, is a very significant industry. Reason behind this is that next nut that we consume is only almonds after cashews, and we consume only 90,000 tons of almonds annually. So even from a edible nuts perspective, cashew is almost 3 times of the second nut in question. This is the industry has been growing. I would we can say that it is growing at 3.5% annually. But there is a difference in the way we see the future. If you really see the way economy grows, if the economy grows faster, then the consumption of cashews has always grown faster. And with the major economy like us in India, which is growing leaps and bounces now, we expect the cashew industries to further uh, increase the rate of growth as well. Next slide, please. So, so more than 63% of cashew of that we consume comes out of Africa. Besides that, the other areas that produces the cashews are Maharashtra and Andhra, Odisha, Kerala, etc. And that's how we get all our cashews. Next slide, please. So this is the breakup of the cashew per se, the state-wise. If you can really see that the major 42% is coming out of Maharashtra and Andhra Pradesh, and also these locations are very near to our factory. Next slide, please. So talking about a future expansion plan, as we have already said, we are looking at increasing the capacity currently from 40 metric ton to 140 plus. We are also looking at expanding the capacities in the oil segment and byproduct segment, and that's going to be further expanded into the biodiesel and biocharcoal space. Yeah. Next slide. So the rationale behind the investment, I would like Kunal to take it up from here. You're muted, Kunal.
Sorry. Thank you, Josefa sir. Thank you, Patel sir, and thank you, Kiran, for the this investor meet. So, as Josefa sir talking about the business and the what are the company object for the issue. So, from the investor point of view and the opportunity point of view, I would say the company are into the cashew processing and projections regarding. I would say the company are having a good projections in terms of the business and the financials also. And the investor point of view, the other things are issue size is around 51 CR and the price band is around 90 from 91 to 95. Anchor issue is opening on 11th of this month, July, and the for the public, it's starting on the 12th July to 16th July. Total equity for the public issue is around 53 lakhs 68,800. Uh, Company are showing the PAT of around 2.8 CR in the month of May, where company valuation is around 200 CR, and we are coming with the IPO for 51 CR, where the PE will be around 11.90. Let's see talk about the category wise bifurcation for the equity. Total equity size is around 53 lakhs 68,800, out of which market maker reservation is around 2 lakh 68,800 equity shares. The size is around 2.55 CR. Next category is QIB category. Total QIB category proportion is 15 lakhs 28,800, out of which QIB proportion is around 25 lakh 48,800, and the anchor proportion is 15 lakh 28,800. Retail category are distributed 17 lakh 85,600 equity shares, and the NII category is distributed 7 lakh 65,000 7,65,600 equity shares. Lot size is 1,200 equity shares per lot. Right now, pre-issue equity shares is around 1 crore 50 lakh equity shares. Post issue equity shares will be 2 crore 3 lakh 68,800 equity shares, and post issue in market cap around 1 crore 193.50 cr. Presently, promoter and promoter group are holding 86.45% of the total equity, and the post issue will be 63.66 percentage. Right now, public is holding 13.55% of present holding shareholding pattern, and post issue public holding will be around 36.34 percentage. Companies is going to list on the SME platform of BSE India, and the issue is opening for the public on 12th of July and closing on 16th July, and company is going to be listed on 22nd July of this year. So this is regarding the investments and the equity structures. Regarding the utilization of the proceedings, company are going to utilize 25.53 crore towards the setting of new manufacturing unit and installation of plant and machinery thereon, and 5.91 cr towards the purchase of plant and machinery installing the existing manufacturing unit, and balance into the GCP and the issue expenses. So this is the utilization and the object of the issue. Okay, so summarize financials of the company. As we say, we are coming with the IPO on the basis of the May 24 financials. We are having a bifurcation of the segment-wise revenue also. So cashew processing is around 43.73 percentage, and commodity trading is around 56.27 percentage in the month of month May ended. And if you see in the financial in this slide, the revenue breakup is given. Cashew processing is showing 9.63 cr, and the commodity trading is 12.39 cr. So total revenue in the month of period ended May is 22.03 cr. So product wise breakup is in the I would say May ended. Cashew processing is showing 9.6 cr, sugar is showing 12.11, and the other commodity product is showing 28 lakhs rupees. So this is the total revenue breakup. Can we have a next slide? Okay, so this is a summary financials of the company. As you see, the net margin of the profitability is around 10.17 percentage. Previous year it was 8.59. And as Patel sir has said, due to COVID impact and everything, PAT margin was 1.75% in the year of 22-23. So right now, company PAT margin is 10.17 percentage. So you can see the summary balance sheet of the company, equity, and the current asset, current liability, and other part of the balance sheets. So present cash flow status. If you can see the cash flow from the operation, investment, and the finance, everything is there on the screen. So now I want to conclude with the intermediary involved in this assignment. So Ekadrish Capital Private Limited is a lead manager to the issue and the underwriter also. Mars Shitla Security Private Limited is a registered to the issue. Asha Agrawal and Associate is a legal advisor to the issue. ICICI Bank is a banker to the issue. HDFC Bank is a banker to the company. And Doshi and Company is a auditor, peer review auditor of the company. And SS Corporate Securities Limited is a market maker. And Kirin Advisor is our IR and PR agency and a designing partner of the Aelea Commodity Limited SME IPO. So this is the thank you to everyone who are joined in this investor meet. If anyone is having any questions or anything, Vaishnavi, we will take it
Yes, sir.
from this.
Thank you.
Thank
Now
you.
we will start with the Q&A session. I request all the participants to post their questions in the comment box. So first question is from Mitesh Kundar. How reliant are you on top customers and what steps are you taking to mitigate the risk of revenue loss from any customer?
Okay, I'll take this question. Uh, we are mainly focus on general trade, and 80% of our business happens from general trade. We do not allow any customer to go beyond a significant percentage, and that's where the de-risking happens. So, on an average, a customer would not be more than 3.5 to 4% in sales, and that's the reason why we are quite de-risked in that form itself. And we understand, if you have very large customer, that can ruin the business. So that's the answer to this.
Okay. Next question, please. Sachin Gupta. How do you differentiate your products in the market and what competitive advantages do you leverage?
So So what we basically look at is how we can have a preferential access with our customers, and that's our USP basically between any other cashew processor and us. So first is that we actually offer a basket of products. Beyond cashew, also we have some other products that we trade in. That is our processing businesses that we would like to enter into. And currently, we are based in Western India, and 63%, as I said, like 63% of the raw material is imported into India. So we are actually the cheapest importer into India. Next is that we actually have the market. The cashew market is also 70% from in the Western Indian perspective up till north, and that also takes into account that we are near to the market as well. From both the sides, we basically end up saving a significant cost for the customers from a logistics perspective. And being a large processor, we can offer them a significant quantity of cashew processing, cash single grade, which is not possible for a smaller timers. And that's the differentiating activities that we help us in getting the preferential access to the customers.
Okay. Next question, please. Archan Pathak. Why was there a sudden hike in the revenue for financial year 21 coming from commodities? And by financial year 26, what portion of the revenue will be coming from trading?
So, so there was no hike in the revenue per se from FY21. Uh, the revenues have more or less steadily growth has grown in. It's a consolidated business, and so if you really see that, our growth trajectory has been like we have been growing at 10-15% on our top line every year. Only thing that we have seen is that we have seen a dip in the profitability during FY22, and but that was basically in a lag to the FY23. So the FY23 results would show you on a lag basis the profitability being dropped. Otherwise, rest have been in a steady state growing. Coming to second part of the question, which is FY26, what portion of revenue will be coming from trading? Trading is not that we really focus on. If you see the products that or you rather see the way we run our business, we first try to capture either sales or purchase side of any product that we want to go in future in processing. And cashew also actually started in the same format. And the trading activities that you see in other products is basically the activities that we are trying to do to build a future processing pipelines. So trading would be very limited per se in FY26. The major portion of the revenues will be coming from cashew processing.
Okay. Next question, please. Siddharth Air. Is the new expansion coming in the same factory or you need to relocate the unit?
So it's actually just some few meters away from the existing factory. The capacity is significantly large, and you could it's a almost the requirement is 3x of the current existing land requirement. So it is just coming very near to the existing factory in meters, some few meters.
Okay. Next question, please. Arundhati Kapila, do we supply pan India? What is our sales and distribution network? There is a public holding of 13.55% in the company, to whom these shares have been issued at what price?
So we do supply pan India basically. We are having significant presence in Western India, Northern India, and Central India. But currently, because of the capacity constraints, we are not able to supply. We basically say a lot of no's. We say nay. We have a nay rate which we have, and that's why Central India and Eastern India is something which we right now do not supply significantly. To the second part of the question that we have, yes, we have issued some shares to the public, and they have been issued at different pricing. That details would be available in the public domain.
Okay. Next question, please. GQA Capital. By when can you achieve full capacity utilization on your expanded capacity of 3x?
So we expect to commence the production in this financial year itself. The utilization will take some time. We will see utilization of the existing expanded capacity, along with the significant portion of the byproduct capacity also getting utilized in FY26.
Okay. Next question. Vibha Deshpande. What business risk the company poses to?
If I just put the number one risk is basically we are dealing in an harvested product. We are dealing with food product, and sourcing the procuring the raw material is the significant risk. Our advantage here is that we have significant strong presence in the supply chain in the global, predominantly the African region, and our experience, myself and other founders, comes from the this region. So we have de-risked that to a significant level.
Okay. Next question, please. Sachit Gupta. What regulatory trends on economic conditions are critical to your business strategy?
See, this is mainly a very small food product, and other it is a snacking and sweet savory product. So government regulation really doesn't kick in significantly. Unlike you can see that regulations coming in wheat flour or pulses or onions for that matter, because those are commodities or food products that we really consume in large segment. This is a more value added, significant value product, and consumed by a large mass in India for sure. The economic conditions specifically, if you are growing population and if you are economically developing population, that really comes in a big way to increase the consumption. You can see that I spoke about that the annual consumption is already growing at 3.5%, but as the economy develops, the consumption significantly increases, and that's the advantage that the product has.
Okay. Next question, please. Devesh Purohit. What is our current debt as on date and rate of interest?
As on date, roughly 40 CR is the current date. And rate ranging from 9.1 to 10.1.
Okay. Next question,
This
please.
includes both short term and long term.
Okay. Prathamesh Oza. What measures are you implementing to enhance customer retention and attract new customers?
I'll answer this question about the measures implemented to enhance customer retention. See, our advantage is again we are preferred by the customers, and to really see that we are significantly being deeper in our general trade. It's the more if you someone understand the distribution mechanism, they will really understand because general trade is the most difficult thing to crack in terms of distributions and sales, and 80% business happens through general trade. So that's where our USP is. And to add to this USP, in a simple way, I can tell you that if my customer is asking for a product, it reaches in 2 days on an average to them, compared to any large processor which is based in South, would take at least 4 to 5 days to make the product available to the customer. So that's a logistical advantage that my customer has. So retention comes very naturally to us, and to attract new customers, honestly, the price proposition and the overall value proposition that we offer bringing in more customers. Our challenge is not getting more customers today. Our challenge is to serve those customers properly, uh, because we have been given a very strong feedback from our customers, and we are actually, as I said, we have a nay ratio system in our company. So we can say a lot of customers that sorry, we do not have a product available right now, and that's the reason why we need to expand significantly faster. Because for a longer you keep saying no to the customers will find some other place to actually get their you know needs satisfied. So that's the reason why we are increasing also the capacity significantly.
Okay. Next question, please. Priyanka Salunke. Who are your competitors in cashew processing and trading? Listed players.
Uh, None of the top five are actually listed, but yes, we do have listed players like Krishifal Food and Prospect Cashews. So these are two players. They are from a size and scale, we are significantly larger than them. But we do have non-listed competition from an MNC's companies.
Okay. Next question, please. Sachet Gupta, could you discuss the efficiency improvements expected from the installation of new machinery and the setup of new processing unit?
See, operationally, machinery efficiencies, I would rather say that anytime when you go for a larger machines, you end up paying significantly less for the enhanced capacity, and that's how the value proposition helps you. The second thing is that space utilization as well. The larger machines are compact in nature compared to the smaller machines in terms of the space utilized and the output thrown ratio, and that's the overall utilization efficiencies that the machine gives you. It also helps us in keeping significantly in-house service team and maintenance team, because each machine will require a specific kind of a training, and those trainings can be very costly for you if you are not having significantly large capacities. So maintenance also reduces because you then are able to keep the in-house teams as well. So the overall efficiencies, you can say, like, if the margin on a margin front, it significantly adds at least 400 basis points to you.
Okay. Next question. Shantanu Oza, what is the projected growth in revenues and profit for next 3 to 5 years?
Okay. I would not put some numbers to this, but just to give you an understanding that currently we are actually going at 40 metric ton per day capacity. Okay. We are likely to expand this capacity to 2.5x. And if you really put the numbers to the perspective, you will really realize the top line. And this is supposed to be completely coming in FY26. In FY26, we all also see the byproducts expansion as well. And with the byproduct expansion, while the top line will increase with slightly more, but the impact will be significantly on the bottom line, where the the margins will significantly improve because of the efficiencies and the value added services that we will be able to provide.
Okay. Next question, please. Kuresh Rangwala, how many days credit you give to big corporates like Reliance? If any of your big corporates discontinue as a trade with you, do you have alternate plan?
Honestly, right now, very specifically, I'll not discuss any significant specific corporate here. But on an average, we don't give more than 7 days credit to the corporates. We have to give corporates and institutional customers around 7 days credit, 7 to 10 days on an average. Uh, Corporates as well as institutional customers don't make significant number in our overall business. They are only 15%, and we have specifically restricted them at 20% on an overall basis. So it's other way around, that we actually do not want too much of trade with the modern trade as well as institutional. Anybody who is in the business basically understand that they look for a much better pricing, and that eats up in our profits only. So for us, basically, we have general trade. We do not have sales problems for now. So right now, we are not encourage them significantly.
Okay. Next question, please. Arab Banerjee. India is also a larger producer of cashews. Why do we import from African countries? Is it price benefit to us?
So India consumes much more than what it actually produces. As I said, 63% requirement of India is actually imported. So anyways, you have to import. Now, yes, there is a price advantage while importing raw cashew nuts. The other advantage is that because we are in the Western India, it actually comes farther cheaper compared to anywhere buying from the southern cashew processing regions.
Okay. Next question, please. Amit Anam. What is the gross profit margin and net profit margin of company for financial year 24?
Okay, Ashok, would you like to take this question?
I will say like EBITDA level, the gross of margin are around 10, 11, and the net is around 9.
Okay. Next question, please. Siddharth Air. You are currently operating 95% of capacity. Why we are doing expansion when we are almost reached 100% utilization?
Uh, we never expected such a you know overwhelming response from our customers. Let me put this way. We initially thought of doing a 20 metric ton kind of a project. In between, we understood that the customer feedback is that we will like to buy more. So in between only, we had made a 40% capacity. Today, when we are at 40 metric ton capacity, we find our customers still wanting more, and that's why we are actually looking at increasing the capacity significantly. At 140, also, uh, what demand we have projected, we would be actually short of that, uh, uh, demand satisfaction. But we are happy that we have the supply is limited compared to the demand, and at 140 it also helps us in keeping the commercially efficient all the byproducts production. So we do not want to really go for more than 140 as of now, because the capacity enhancement happens in a multiplication format. At that point, right now our customers have not given that kind of feedback that we can buy up to maybe 200 or 300 metric tons capacity. So we are going for 140.
Okay. Next question, please. Jatin Mehta. In first 6 years of establishment, what is driving you to raise funds? What opportunity you see in the business and what business growth you expect in next 3 to 5 years with fundraise with IPO?
Uh, See, we have no one like to really diversify their stake when you're growing big. But what we see honestly here is that we will have limited source of funds in raising here, and when we would internal accruals are taken into account, it will take a lot of times. The thing which I told you beforehand is that we are currently at 40 metric ton and we are saying significantly no to the customers. And this no will not last for long. Either the customers will look for going somewhere else and buying their needs, or we'll have to really look at expansion. Internal accruals were not the way to really expand it, because that would not have happened. That's the reason why we are looking at fresh round of equity through raising, going for the IPO, and accordingly we will expand the business.
Okay. Next question, please. Kajal Pathak. Is land on which your plant is based owned by the company or it's on lease? If owned, what was purchase cost?
So the current existing unit is a lease land, which is 30 years lease as per the requirement of
99.
the 99 years lease as per the requirement of the Ministry of Food and Processing. The specific price, purchase cost, I would not be able to divulge here. And the expanding land is actually an owned land.
Okay. Next question, please. Chaitanya Deshpande. What is your working capital cycle?
So on an average, our working capital cycle is around 90 days.
Next question, please. Arav Banerjee. How are our payment terms with clients?
Mainly cash and carry.
Next question, please. Next question. Anandi Mittal. What is our current debt as on date
I think
and
it's
rate
already
of interest?
answered.
Next question, please. Amit Anam, can you please tell about the inventory level the company has to keep?
So being in harvested products, that is where the raw material has to be kept for a significant time. A major chunk of our working capital is actually into inventories only, and that too into raw material inventory. Somewhere around 70 days raw material is kept.
Okay. Next question, please. Next question. Kapil Ahuja. What scope are you seeing in rice business?
Uh, Too early to tell you, but that's a secret for us.
Next
But yeah,
question.
we are actually very bullish about it.
Okay. Next question, please. Prince Chaudhary, please tell us about your competitor prospect Commodities Ahmedabad based company and your competitive advantage.
I will not like to actually comment on any specific company. What I can tell you is that and none of the top five players is actually into is a listed company, and we are significantly large compared to any of the listed peers.
Okay. Next question, please. GQA Capital, can you sustain 10% PAT margins going forward?
We are bullish on it. We are bullish on it, much better than the existing margins.
Okay. Next question, please. Next question. It's again from GQA Capital. Can the market absorb your 3x increase output as the underlying market is growing at just 3% YOY?
Well, what is the capacity that we have come up with is basically basis the fact that we have already done a survey and we are already seeing our customer demand. Basis the demand, we actually, in fact, we are looking at much bigger capacity that we can do cashew processing for. But due to the byproducts efficiency that we really need, we have to restrain our capacity. We have to increase the capacity in a ratio. So at 140 ton, if we are doing it, the next level of capacity for byproducts would be around 280 tons. Okay, so we are not still to that at 280, and that's the reason we are keeping at 140, while the cashew demand is further actually more than 140.
Okay.
Yeah.
Next question, please. Vibha Deshpande, what is your sustainable EBITDA margin going forward?
We can sustain whatever existing margins are, and as I already said that when the byproduct margin hits in, we are expected to have further 400 basis point increase in the margin.
Okay. Next question, please. Chaitanya Deshpande, all the best for your IPO.
Thank you.
Mahendra Kankaria, all the best. Radhika Narang, hope the IPO will yield with positive results.
Thank you.
Sir, I guess we have covered majority of questions. Thank you everyone. And thank you
Thank
Josefa
you.
sir. Thank you Ashok sir. Thank you Krunal sir. All the best for the
Thank you,
IPO.
everyone. Thank you. Thank
Thank you.
you.
Thank you.